Hello my fellow investors, welcome to my new video. Today I will start with somebody that I have never done, and I would like to ask you if you like these videos and if you like that I'm sharing my experience with you, my mistakes and my gains, to like this video and to subscribe to this channel. I would really appreciate that. So thank you in advance. Today I will be telling you about changes in my portfolio. Also, I will apologize for a mistake that I did in calculating my return, and I will explain to you what happened actually. We will also comment a little bit forecast about real economy and some comments that Federal Chairman Powell gave, and some really interesting data from JP Morgan asset management team, which might be really valuable to a lot of us. As you can see on dashboard of my brokerage account, value of my portfolio is a little bit above $33,000, and in last 7 days I have underperformed S&P 500. You can see this black line, which is S&P 500, and you can see that my portfolio started above it. I was outperforming it, but at the end of the week, when Alibaba and Foot Locker quarterly earnings went out, actually I ended up below S&P 500. Foot Locker went down in Friday around 8% and Alibaba went down around 4%, I think. So yeah, unfortunately, last week was quite bad for me. I also was thinking about buying some additional Berkshire Hathaway stocks, but I actually didn't pull the trigger because Berkshire Hathaway has some debt on its balance sheet, and Geico is kinda unfamiliar chart for me because I have no idea what is it insuring at this moment. I know it is mainly auto insurance company, but Geico has exposure to some other areas, and all of these delinquencies and bankruptcies that are coming might affect it too. So since it is uncharted territory for me, I decided to keep shares that I own at this moment, but not to increase them additionally. But I did buy 200 shares of Equinox Gold. So at this moment I sit at 600 shares. Average price is $8 and I'm actually around 10% up on this position. So now we come to my return chart that I'm manually updating, and I have to apologize to you because last time I gave you wrong data. I told you that I'm around 20% up year to date, but I was actually around 24%. What happened is that I copy-pasted formula, and actually I compared early April with first week of the year, but then when I copy-pasted to it, it compared last 2 weeks with second and third week of the year. And it should have compared them with the first week of the year. And since I was in second and third week up several percentage points, it actually showed that I was 20% up compared to second and third week and not compared to first week. Sorry if this is confusing to you, I just wanted to clarify what happened and to apologize for wrong data that I have gave you last week, and yeah, this will not happen again. And yeah, unfortunately I will have to manually keep updating it because I moved to this brokerage account at the end of the February, and yeah, since I was invested in stocks at the beginning of the year too, I had to update all of my portfolio manually. So you can see my yearly performance from the beginning and not only from when I came to this brokerage account. And on profit chart you can see that I'm around 3,800 in profits this year. This is again maybe a familiar chart to you because I have showed you the same chart in last video, but this is Revolve chart and I'm showing it to you right now because I actually sold all of my Revolve stocks. If you remember, I bought them at around $8.50 and now I sold them half at around $16 and other half at around $14. I know that even though I am telling you to be a long-term investor, to do your due diligence and to buy companies and not to worry about short-term turbulences, I may be looking to you like I am some kind of speculator and short-term trader. But when I was analyzing Revolve stock, it was trading at around $8 and market capitalization of the company was around $600 million. They had almost $100 million cash, they had a little bit of debt, and I liked their management, I like their future, and I knew that they will cope well with this situation. In the long run, even though next year or two they will probably be losing money. And I was okay with that because stock was at $8, market capitalization of the company was 600 millions, and that story made sense to me. But now in only few weeks Basically nothing changed in the economy and in their outlook, but company is not $600 million company, it is now over $1 billion. And paying $14-15 per share for this balance sheet, for this outlook, doesn't make sense to me personally. I have no idea what is going to happen with the price of the stock. I really wish best of luck to all the investors, but for me personally, holding this company at this price doesn't make sense to me at this moment. I am really having hard time explaining to you my philosophy when I am trading like crazy at this period, but hopefully you understand why I'm making these swift changes. What also scares me is macroeconomy development. You can see on this chart several scenarios of what might be in front of us. And my personal opinion is that a lot of people are expecting V-shaped recovery. In stocks, we've already had similar thing. S&P 500 didn't recover all of the losses it made in March, but it recovered more than half of the losses it made in March. But real economy or Main Street didn't recover at all. More than 30 million people in US have lost their jobs in the last several weeks. And my personal opinion is that at least 10 million jobs is permanently lost, and that will have huge consequences for the economy and for the business. I will also tell you what Chairman of the Federal Reserve, Powell, said several days ago. So he made clear his concern that a recession may last long enough to cause extensive damage to the economy and make a recovery weaker and slower. In such a scenario, unemployed workers would lose skills and their connections in the job market, making it harder for them to find new employment. And with many small businesses bankrupt, fewer companies would be available to hire the jobless. He also said that deeper and longer recessions can leave behind lasting damage to the productive capacity of the economy, and that avoidable household and business insolvencies can weigh on growth for years to come. I really think this is true and that this is not priced in stock prices. So I will simply hold with my cash for some more time until I find greater opportunities. I also wanted you to show this chart, which is made by JP Morgan Asset Management. This only proves you that buy and hold strategy is really long-term good thing to do. From 1997 to 2018 we had few bear markets when stocks fall almost 50%. But as you can see here, after that we've had huge bull markets where returns were triple digits. And this is a really good thing to do and to follow and to think about for the 90% of investors. And I would really advise to most of the people to follow this strategy. It is really good. On this whole chart you can see how important are dividends. Especially we've had like in 70s and in 2000s, dividends gave you more return on your investment than actually capital appreciation gave you. And in the last almost 70 years, you can see that dividends gave you around 1/3 of all of your returns, period of 70 years. And who don't get dividends? Speculators, people who are trying to time the market, and traders. And when you take into account price for selling and buying stocks, which also cut part of your return, you get this chart. You can see that in last 20 years, S&P 500 on average gave you 7.2% return, and average investor made 2.6% return in last 20 years. Or not in last 20 years, but from 1998 to 2017. So all of that timing the market, buying and selling, wasting money, made you barely to beat inflation. So average investor barely managed to beat the inflation with his investing. So for more than 90% of investors, I would really advise to buy S&P 500 or 60/40 portfolio and to simply forget about it. But what I'm trying to do is to outperform S&P 500, and my goal is to generate 12% return every single year on average, and also to outperform S&P 500. On this chart that I have made, actually not chart, but in these tables, you can see that average investor from 1997 to 2017 made 2.6% of return, S&P 500 made 7.2%, and my goal is, for example, 12%. On $10,000 invested, you can see here how much these three returns would generate you. So average investor would make $16,700 in total, S&P 500 would make you $40,000, and if you would achieve results that I'm aiming for, you would have almost $100,000. But in order to achieve these results that I'm aiming for, I have to buy stocks at really good prices, which are really hard to find at this moment and in this market. So I simply have to be patient and to wait for my opportunities, and I will show them to you gladly when I make them. And yeah, maybe I'm wrong, maybe I will underperform S&P 500 and maybe I will miss more gains in markets, and yeah, if that occurs, then you will at least be able to learn from my mistakes, so you don't have to make them. Well, thank you for watching my video, and I hope you have gained some value here and that you will keep following me. Be part of my path to wealth and to financial freedom. Thank you, have a good day, bye.